My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to help you make some money. My job is not just to entertain, but to educate, teach, and put these gains in context. So call me at 1-800-743-CNBC or tweet me gently at Jim Cramer. After a good day, where tech finally seems like it is out of the doghouse. Dow climbing 228 points. S&P advancing 0.72%. NASDAQ gaining 1.06%. It's time to revisit FAANG, my acronym for Facebook, Amazon, Apple, Netflix, Alphabet, a.k.a. Google. And as an added bonus, because I'm a really great guy, I'll throw in the other big tech name under fire, Microsoft. Let's start with Apple. In the wake of yesterday's tour de force introduction of the new iPhone and watch. Now, I'm not really qualified to judge the quality of the triple camera in the new phone. To me, it looks incredible. The battery life's longer, 1 hour to 4 hours, depending on your new model. Cheaper price than expected. You also get Apple Plus, their new streaming service, for free with purchase of $4.99 per month value. Now, I've looked at some of what they're developing for the video platform, and even though I think that is almost universally poo-pooed, I got to tell you, over time, I think you're going to think it's essential watching. And it's less than half the price of Netflix. I like that entertainment revenue stream very much. I love the one. The new watches only cost $199. I think that's the price point, I should emphasize, to get worldwide adoption for this thing, which will only layer on still more service revenue. I have fantasy football in this thing. Every time one of my guys scores, it's like bingo. Could be explosive. Like when a version of the iPod hit that level, the $199, that's when it took off. What will the Tim Cook haters say when that happens, given that the watch is all on him and so many love it? The upshot. You have a razor blade story that sells at just 17.5 times next year's earnings estimates, with 5G on the way and that rapidly growing service revenue stream to tide you over through these different iPhone iterations. I think the stock is absurdly cheap. Hey, compare that to Coca-Cola or Clorox, Procter & Gamble, which all trade around 24 times earnings. I'll take Apple stock any day of the week. Next up, Facebook. With all of the heat that Amazon's been taking from the Federal Trade Commission, Alphabet's been taken from those 48 states' attorney general, any weakness in Facebook feels more like collateral damage than what we're used to, which is this company being the sole scofflaw in Washington's crosshairs. You need to be careful when you think about Facebook these days. Politicians on both sides of the aisle dislike them. Most of the media can't stand them. Hey, but you know who never abandoned Facebook through this whole kerfuffle? The only people who mattered. The customers, the users, you. I bet if you went back and looked at all those high-profile quitters, most of them are back on the platform. You can't afford not to be. When you see those terrific camera options for the new iPhone, you know what? What you should be thinking? Well, it's about getting the best possible photos for Instagram. And that belongs to Facebook. When you see really smart people like Michael Rubin come on CNBC, he's the incredibly talented owner of the Fanatics. That's a multi-billion-dollar digital sports apparel retailer. He said, listen, he puts half of his ad dollars on Google and half of them on Instagram. Well, now you know where the world's going. I think we've seen the high tide in the era of Facebook evisceration. It's survived. More than that, it's thriving. I'm thinking it's people beginning to recognize how many entrepreneurs have used Instagram to create their own businesses. They are ambassadors for Instagram. I bet there's an opportunity there. Facebook, call me a size buyer. How about Alphabet? Yeah, 48 states' attorney general going after these guys for monopolistic practices. I don't know. Do you know that the FTC spent 2 full years investigating Google under President Obama? Everything, millions of pages of documents, and the commissioners ultimately decided not to bring a case. The thing is, Google has dramatically lowered the cost of advertising for everyone. That's not any competitive, people. So I suspect this latest move will also go nowhere. With the stock trading at 22 times next year's earnings, give me a break. Buy it. Netflix. All right, this one's tough. Well, I don't think there's any one straw that could break this camel's back. We're getting so many services now, including Disney, Hulu, Apple, that we may have reached the point of saturation, even for millennials. As much as I love Netflix, as much as I binge endlessly, I'm worried about this stock. I just don't know how to value it anymore now that there's so much competition, and I'm uncomfortable gaming the number of new signups versus the content, given how the company itself has been completely unable to predict the signups with even most remote precision. I've always liked Netflix because I believe in the subscription economy, and I know I'd pay more for their service if they asked me to. I just don't know if that's still true of everyone else. Call me baffled. Next up, Amazon. It's got some weirdo image problem right now. The Democratic leadership seems to determine that Amazon's stifling innovation and stamping out competition needs to be broken up. The Republican in the White House hates them. Maybe it's because CEO Jeff Bezos also owns the critical Washington Post. But more than 100 million people belong to Amazon Prime. And from a business perspective, a stock perspective, that's what matters. Not long ago, we had Andy Jassy on the show. It was great. He's the head of Amazon Web Services. What did he talk about? How about how his division has brought about relentless price decreases, price cuts in the cloud infrastructure space, something that's been a source of empowerment for millions of small businesses. That doesn't sound any competitive to me. How about you? Unless you view it as predatory pricing against Amazon's cloud infrastructure competitors? Please. I know there are people who truly do believe that Amazon is stifling innovation, but I think that's dead wrong. Amazon facilitates innovation. Where would we be without these guys? Also, this company has been the single most powerful force for deflation in America. They've done more to keep prices down than any other company in history, including, by the way, Walmart. Now, do they run roughshod over the competition? Well, that's another question. But I like the stock, and I remind you that Carolyn Barod, the Fibonacci Queen, told us just last week the technicals say it's time to buy Amazon. I checked with her today. She still says that. I agree with her. Finally, is Microsoft. Boy, is this the least controversial one. Here's a company that was, at one point, completely in the crosshairs of the Justice Department, justifiably, as they were legitimately stifling innovation and competition. Now, Microsoft's an innovator, and now it's a competitor that's done amazing things at PCs, in analytics, gaming, cloud. It's the dominant software company on earth, and it's been performing spectacularly. I think the stock is $1 trillion bargain. Yes, even at these levels. Let's take one step back for a second. Talk about innovation. Hardly a day goes by since President Trump was elected that we don't hear negative things about what China's done to hurt American interests. Whether we're talking intellectual property theft or the subsidized destruction of our manufacturing base, it's all true. Despite all of this, you know what keeps this country in the game? What makes it so the United States is still the largest economy on earth? It's our great technology businesses, chiefly Alphabet, Amazon, Apple, Facebook, and Microsoft. You don't get to be that big if you're a bunch of boneheads. You get to be that big usually because you're the best at what you do, or at the very least because you provide a valuable service for your customers that could be destroyed by breaking the companies up, make it more expensive to use. You don't need me to tell you that these companies are politically unpopular. You do not need a weatherman to know which way the wind blows. But here's the bottom line. I believe if you put these big tech companies to a vote, if you had them on the ballot as to whether or not they should be broken up, I bet they'd come out ahead of any politician or any newspaper for that matter. And that's yet just another reason why their stocks are still worth owning. Loved companies ultimately spawn loved stocks, even if the old media-led critics and the politicians hate them. Reggie in Florida. Reggie.
Booyah.
I like that. Booyah, Reggie.
Booyah, Jim. First-time caller. With all the volatility in the market, what are your thoughts on Nokia NOK as a 5G play?
Poorly run. Can't be backed. Even the Europeans don't want to back it, which is really saying something. They got to get their house in order. It's not. Bruce in New York. Bruce.
Hey, Jim, you're the best, Jim. You are the man.
Thank you very much.
Okay, I've owned Church & Dwight stock for a long time, and it's been really good to me. Periodically, I do my research, and I read whatever's available about the company. I very rarely find anything negative about them. Recently, Spruce Point Capital came out claiming accounting gimmicks were used to inflate earnings. Should I totally ignore that since they're short sellers?
Well, look, some short sellers actually do very quality work, and occasionally they actually upend the bad stuff. But I got to tell you something. I think Church & Dwight is one heck of a great company. Always welcome on the show, and I think you should hold on to it. All right, big tech can't seem to catch a break. It seems to be under fire every single day. But I'm telling you not to bail on this cohort. Oh, and like these people who say that Tim Cook should be fired, they're boneheads. I just like that because the president, I call them Sparkies, I call them Sunshiners. Instead, use the declines in the stocks to pick up their shares at a discount. except for hold off on Netflix. I'm still trying to figure that one out. Well, man, tonight, you thought my fantasy stock draft was over, and you think again. I'm searching the waiver wire for potential bargains for this bull market fantasy. Then on pins and needles, when it comes to an investment in Pinterest, I'm telling you why the company could be worth considering. And we've seen plenty of down and out retail stocks come roaring back lately. But are all worth giving a second chance? I'll give you my take. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.